Hello friends, James Stevenson here, sharing the thread I wrote on Twitter, now known as X, about that awful Reuters report where they said Tesla was losing market share. I'm not going to repeat myself. Normally I wouldn't do two videos in the same topic, but between the time I recorded that first video and right now, I made a bunch of charts, and I didn't show you any of those charts in the previous video because they didn't exist yet. So I'm going to walk you through the thread and show you those charts so that you get the full James Stevenson experience. Let's get some graphic visualizations in here. Right, Loki? My co-host Loki may get involved in today's episode if he wants to come over and eat his breakfast. This is also an episode of Breakfast with Loki. There you go, buddy. Yes. Breakfast. Check it out. Pretty good, right? Pretty good, right? Okay, if he wants to eat breakfast now, he'll come over and eat, and if not, he'll just stay curled up in bed over there, which he does sometimes before he eats. He always eats, he just eats a little later on some days. So here's the thread that I sent out 2 hours ago. Tesla loses market share. Tesla's market share slipped to the lowest on record. Those are quotes from the headline and first paragraph of a Reuters article about U.S. EV sales. If that were all you saw, you might believe Tesla sales are declining this year. There it is. Tesla loses market share. Tesla's market share slipped to the lowest on record. It's never been lower. So funny. So funny. The article is about U.S. EV unit sales estimates published by Cox Automotive for Q3 and year-to-date Q3 versus prior year. Here's the table. So I had to copy down all the numbers in this table. So one at a time, I typity, click-clack, clicked them in to my spreadsheet so that I could make charts out of these numbers because it was published as a PDF, which is useless. You can't copy and paste a PDF. So this is what the article was about, this big old table of numbers. Hard to make heads or tails of a big table of numbers like this, which is what I said immediately afterwards in this thread. Almost like the same person who wrote this thread is doing this video. Lots of companies selling lots of EVs, huge percent gains everywhere. Look at these, 200%, 100%, 100%, 200%. Giant gains if you're not Tesla. Tesla was only up 26% or 20% for the quarter, right? So Tesla's really not keeping up with all these other brands, is what you would see at a glance. But I thought a chart would be good, so I did type all these numbers into a spreadsheet and make a chart to visualize the data graphically instead of as a bunch of numbers in a workbook, because charts are good. People are generally terrible at judging relative magnitude. If you present them with a whole lot of numbers on a page all at one time, people are bad at drawing the important takeaways from data. They get swamped with all these numbers at one time. You know, this sea of numbers up here is just too much for a human mind to process at a glance. And you just say, well, you know, everybody's up, they're all up. Tesla's up by the least, so they're probably doing worse. That sort of thing, right? Here's the chart. All right, so what do we have here? We have a bubble chart. What's the y-axis doing? This is the prior year unit sales for the year-to-date Q3 2022. From that table, I just typed in all the numbers for every automaker. What's the x-axis doing? It's this year's year-to-date Q3 2023 unit sales. And again, we're talking about electric vehicles sold in the U.S. These are U.S. EV sales by brand. And the size of the bubble is telling you what the market share is for each of these brands. The bigger the bubble, the more market share they have. Here's Tesla over here. Tesla sold, you know, about 400,000 EVs in the US last year. And this year they sold, you know, about 500,000 EVs. That's pretty good. It's a lot better than these companies that are down here next to the origin. You can't read them. I mean, you can kind of make out Ford, Kia, and Chevrolet if you know they're there. And I know this one's Bright Drop because it's really just the longest word that's a brand, and because the bubble starts so close to the y-axis over here. That's why it's the farthest one off to the left. There you go. That's your chart. So what did I say next in my thread? I said, oh, I'm sorry. Are some of the labels in the chart above hard to read? Let me zoom in. 10x magnification on both the y-axis and the x-axis. So we'll zoom and enhance in order of magnitude, like they do in the movies. You know, the crime investigators are playing back video from the crime scene, and they say zoom and enhance. Let's zoom and enhance in on this very crowded box down here, the less than 50,000 box. We know Tesla sold about 500,000 vehicles both years, roughly, using rough numbers, and nobody else sold even 1/10 of that. Nobody else even had 50,000 sales last year. Tesla will be literally off the chart by 10x, but you should be able to make out the remaining labels better. Let's look at the remaining automakers that aren't Tesla. Tesla's way, way off the chart. You would need 10 more pieces of paper up and across to be able to capture the Tesla bubble. On just the top, 4 pieces of paper, you would find the bubble. If you were going to have 100 pieces of paper at this scale, stacked out far enough that you could get to Tesla. So here's Ford. Ford has 5.3% of the U.S. EV market this year, which isn't terrible to have 5% of the market. Chevy also has less than 6% of the market. All of the brands that aren't Tesla have less than 6% of the market. Only these two have more than 5%. And you can see as you work your way back across the x-axis, the numbers get smaller because that's what we're talking about. We're talking about this year's sales determining what this year's market share is. So Mercedes, Volkswagen, Kia, Audi, Nissan, Volvo, Polestar, Porsche, Mini, Genesis. Man, it's really hard to make these out, though. They're kind of all crammed on top of each other. Beg pardon? What's that you say? Some of those labels are still impossible for you to read? Okay, well, let's do it again. Let's zoom in another 10x and see if that helps us get a better look at the brands that are taking EV share away from Tesla with huge year-over-year growth. So Cadillac took at least 0.5 percentage points from Tesla by virtue of selling more than 5,000 EVs this year in the US, when last year they didn't even sell 500. So they're up by 0.5 percentage point at least of market share, which means Tesla is down by that same 0.5 percentage point of US EV market share that they took. Lucid, same story. Last year they only sold a little over 1,500 if you go up the y-axis to see how high up the chart this bubble is. This year they sold more than 4,500, so this is like over 200% growth for Lucid over here. They're gaining EV market share. They're taking, 0.3 of a point or whatever from Tesla. Same with Genesis. They only sold about 1,000 last year. This year they sell about 4,000. They're up, over 300%. So they're taking 0.4 of a point away from Tesla's EV market share in the US, if that's the way you want to measure numbers. We could see Mini earlier, but we can see them a lot better on this chart. These dots are getting very small now. 0.1% of the US market is what GMC has for their EVs. Here's VinFast. They're on the x-axis because a year ago there were no VinFast sales in the US. So you can't even measure how much they're up as a percentage, which is what matters when you're talking about how much EV market share did these brands gain or lose. Well, did they gain more versus the prior year as a percentage than Tesla did? If they did, they're gaining market share and they're taking it from Tesla, right? So that's what that chart looks like. Still can't make out the numbers from some of those brands? I got you, fam. I can do this all day. Let's zoom in another 10x, a total of 1000x now. 3 orders of magnitude to get a better look at how brands like BrightDrop are taking market share from Tesla. And I did mention in my other video that BrightDrop is taking share from Tesla. And the way you can know at a glance from this view whether they're taking market share or not is to draw a 45 degree, well, it's not 45 degrees in this case, so to draw a line from the origin through these equidistant points, so where the 50 and the 50 meet, where the 150 and the 150 meet, etc. So Mazda and Jaguar are actually losing share here. They're down versus their prior year share. They're not keeping up. They're down. You can see these brands last year sold more than 250 units. This year they're selling less than 250 units so far year-to-date Q3 2023. BrightDrop is ahead of where they were last year. They sold a little over 150 last year. This year they almost sold 350, so they're almost up 200 units. That means they're taking EV market share from Tesla. And then I shared the video that I made yesterday about this before I had these charts. I'll just very quickly bring up the charts for some bonus content for you. Here's what that first one looks like. Somebody asked me if I could put this on a log scale, so I did. That's not in the thread, except as a reply to a question somebody gave me. So that's the other way of doing it. If you don't want to do it on 4 different charts, you could just use a logarithmic axis for the x and the y axes, as I have done here, starting at 16 units and working your way up past 524,288 units, which is what you need to hold the Tesla bubble on this chart without it spilling over. So the way to read this is every time you cross a line moving to the right or moving up the page, that's doubling sales. So in order to move from where you are to the same spot in the block next to you, to your right, or in the same block above you, to the same position within the block, you have to double your sales to get there. So Ford, for example, would need to double their sales once, twice, 3 times and change if they wanted to get to where Tesla is today. And they're the closest. So everybody else would have to do better than that. Chevy, I guess, is in about the same position. And then you can see Cadillac is the constraining factor. They only sold a little over 32 vehicles in the prior year. They sold over 4,000 this year. So think about what a huge percentage increase that is. Way over 1,000% growth for Cadillac year over year by virtue of how far off to the right they are relative to how high off the x-axis they are, with the x-axis set to 16. They're barely double the minimum allowed by this chart. And because I'm labeling everything below the dot, I had to do it that way to get that dot to even appear on this chart. If not for Cadillac, I could have made the beginning point 64. We could have started from here and gotten every other point on this chart to show, but I didn't want to crop Cadillac off the chart. So there's that, and I guess I'll show you, this is how I input that table of numbers, not in waffle iron grid format, which I hate, but exactly the same presentation, just this is the James Stevenson version of the format. With Tesla's numbers shown here. 56.5% of the market still belongs to Tesla, with the rest of these automakers combined splitting the remaining 43.5% between them. And that's my video. So we'll check back in with Loki, who is still snoozing in bed, and I'll outro and say, if you've enjoyed today's video, don't forget to click the like button, always free to do that. Thank you to everyone who supports me, whether you do that through Patreon or on X, or by joining my YouTube channel as my executive producers Kathy Kitchler and Rebellionaire.com did, and I'll see you in the next one.